Hey guys, today I'm going to explain to you what a holding company is. My name is Robert and I am an attorney with Malayi Law. We help entrepreneurs just like you start their businesses without dealing with complicated legal forms. And we are also the #1 highest rated business law firm for entrepreneurs with more than 1,500 5-star Google reviews. So I'm sure many of you guys have heard about holding companies, and you are probably wondering what they even are. A holding company is generally formed when you have your corporation or LLC own another business. The holding company will typically hold an equity interest or asset interest in the other company rather than be actively involved in the other company's business operations. Don't get confused when you hear the words holding company and parent company tossed around. In most cases, these are the same thing. From a practical standpoint, you can think of the parent company as the owner and the subsidiaries as the businesses that are being owned. The company underneath the parent company is also sometimes called an operating company. So you're probably wondering why people form holding and parent companies. And I'm going to explain some of the main benefits and advantages, as well as some of the disadvantages. First, I want to say that I am not an accountant, so I'm not going to address the tax benefits of holding companies. However, I do suggest that you speak to an accountant before you set up a holding company, because there may be significant advantages and disadvantages to having holding companies. But anyways, a holding company provides you with 3 main benefits. First, having a holding company allows you to have one company that controls the subsidiary companies, and essentially it provides you with centralized control. You can have a parent company owned by yourself and then give each subsidiary company its own management team that manages the subsidiary. But at the end of the day, you will still likely be the individual that controls the subsidiaries. Overall, it allows you to form a company that has its own management while still having control over the company, which is the parent company. The second benefit of a holding company is for investment purposes. If you have a holding company and subsidiaries and you are wanting to raise money, then you can pick and choose which company will be raising money in exchange for equity. This essentially allows you to give an investor equity in the parent company, which in return gives the investor equity in all the subsidiaries. However, if you don't want to sell equity in everything, such as all the subsidiaries, then you can simply just sell equity in one of the subsidiary companies. Ultimately, it can be used as a way to limit the amount of equity you sell in your company by being able to pick and choose which division of the company you want to sell. The last main benefit is that having a holding company is another way to limit your overall personal liability and limit the holding company's liability. For example, if you can make it so that your holding company owns the asset and simply just leases it to the subsidiary, then you can avoid significant liability on the subsidiary's behalf and the holding company's behalf. This is beneficial because if the subsidiary is faced with a judgment or has a creditor coming after it, then it will be harder to get anything from the subsidiary because the assets are owned by the parent holding company. Additionally, it allows you to have a subsidiary declare bankruptcy without having to bankrupt the entire business structure. Keep in mind, this is not a foolproof system, and courts are still able to go after the parent company in certain situations, but we will discuss that in another video. It's a little bit complicated. This is just a brief general explanation of some benefits of holding companies and how they are sometimes used in today's world. Now, of course, there are some downsides to holding companies. The main downside is that it is more expensive to structure, and you will have to pay annual fees for each subsidiary as well as the holding company. Additionally, your paperwork and maintenance will be a little bit more complicated each year because each subsidiary will need a separate bank account, financial statements, and other records. So you might be wondering how a holding company makes money. The answer is simple. Any profits or dividends made by the subsidiary can be distributed to the holding company. The parent company can also provide services to the subsidiaries in exchange for money. Overall, there are many benefits to having a holding company. However, keep in mind that they are not for everyone. Simply having an LLC or corporation alone will provide you with significant benefits and great personal liability protection, and there is no need to overcomplicate your business structure if you don't have to. However, if you think that a holding company may be right for you, then click on the link below to schedule a free consultation. During the call, I will speak with you, or somebody from my team will speak with you about holding companies and determine if it is the right fit for your business. If it is, then we will set up everything for you so that you can focus on your business and we can do all the paperwork and heavy lifting for you. So go ahead and click the link below. And also, if you have any questions, just post them in the comments below and my team and I will try to get to them as soon as possible. See you guys in the next video.